Assalamu alaikum student, hope you are fine. Today our lecture is the fourth week and the topic is the accounting cycle. Now we will start properly the accounting cycle and we will learn about the capturing the economic events. Okay class? Okay student, that's a lesson notes detail related to your week 4. Fine. And the learning objects of this week, you will be able to get some knowledge about the accounting cycle, like after the studying of this, you will be able to perform, you will understand the some transaction, like you can understand the journal, first step of accounting cycle, what is the journalization journal, and the relationship of journal entry to the ledger account. Okay, I'm talking the first learning objects. Look there, and this selected highlighted bar, student will be able to explain the purpose of journal and its relationship to the ledger. Fine. And the second thing you will be learn is the financial years debit and credit balances, how we can calculate the debit and credit balances, and we will talk about the financial years. And third important thing that we will be covered there, capturing the economic events, mean to say you will perform the transactions, business transaction, how we can record the business transaction. Fine. That's in this episode, in this lesson notes, we will learn about the balance sheet transaction, not all transaction, not the transaction that related to your whole financial statement. It is just we are talking about the balance sheet transaction. I mean three accounting, three chart of account, I mean to say mostly transaction you will be faced that should be related to the assets, liability, and honor equity. Okay, this lesson notes is easily available on your LMS, Institute LMS. You can learn and you can get a help from the chapter number 3 from your book. Fine. After the learning, after watching the video and learning detailed lesson notes, you will be able to answer the following concept, and these questions that we will be discuss in your class. Fine. Discuss the first accounting step, journal with example. You need to be explain in front of your teacher as well as your class fellows what the concept of journal by different examples. Similarly, you need to be shared your information, your understanding ledger and its examples. Then you will be able to share your knowledge about the trial balance. Okay, trial balance, that is the one of a trial, not a trial balance. Okay, TRIAL, trial balance. Fine. And its limitations. Fine. And further you will be able to learn the analysis, applying the debit credit rules, journalize, posting and design the trial balance of the balance sheet transaction. It is basically a way you need to be learn and you need to be applying in front of your class how you will do the transaction. For this purpose you need to be learn about the debit credit rule. You need to be revised. Okay, in chapter number 2 you will discuss it, the debit credit rule, accounting equation. You to already familiar about how we can read the transaction. Then finally you come on a journal entry and posting the things. Fine. It is a class overall the learning objects of our this week and important points that we will learn in this week. Fine. Now we come on the lesson notes detail. It is related to the journal. You are already familiar about the journal, how it will be present. Remember in a week 3, if you have some if you learn in a week 3 and detail about the journal, it is just initially record the business transaction. Fine. We are making the debit and credit rule of a double entry concept. Okay, how to debit and credit rule of a double entry concept, that is applying on regarding the economic events, and using the T account, that's it is a affect the business transaction, and we will record the assets, liability and honor equity behalf of these journal. Fine. And further, you should be realize about the transaction really recorded indirectly in a journal ledger. And the word journal ledger, what is this? That is some underlined lines. Look there carefully. Actually, the accounting system, the information about each business transaction is initially recorded in accounting record called the journal. If you talk about the word journal, what is this? Anyone asks you what is a journal, you can simply give an answer. It is a how initially business transaction is recorded. This procedure, this step is called the journal. Fine. The information later transferred to the appropriate ledger account, that is the way of a posting. Fine. Now the journal is a normally day-to-day transaction. In a business we are facing the different transaction, maybe more than one transaction in a same day. But the and in this transaction you should keep in the mind the double entry concept. Again, it is the starting that one account should be debit and another account should be credit. Fine. It is the first rule of a normal, the concept of double entry concept. How you can record the business transaction, then you are applying the double entry concept there. Debit and credit amount of which account will be the debit, which account should be the credit, you need to be realized first. Then when you will read the transaction, try to understand it. When you will be able to read a business transaction, then you need to be write up the at least two things. You should be realize in the thing that come in your mind. First, you need to be identify the some two account, at least two account in your mind, and you need to be find the statement at least two account. Fine. And then you need to be like I am going to be right there, at least you need to be identify two accounts. Okay. And this account should be one account should be debit, and one should be the credit. Okay. With same amount, with same amount. Okay class, with same amount. Fine. It is the first rule of a double entry concept. At least we need to be identify two account, and then applying our concept which account will be debit and which account should be credit. Okay. Then you will be applying the journal, and there is a one example you can view there. Look, that's the example. Simply journal we are writing there. We are doing the journal entry or a journal. It is a journal. Fine. Now it is a now look there. If you are doing the transaction there, look there class. Let's examine the very first business transaction of overnight auto services. Like we are going to be start a business and overnight company. Here you say overnight company is basically it's going to be invest in a business. That's the name of our owner. And the January 20, 2011, McBaron family invested $80,000 in exchange of capital stock, asset, cash. Now you need to be realize about the what will be happen. First thing is that 80,000 is going to be invest. Okay, but normal 80,000 is going to be invest, and that's the investment from the owner. Which two account are going to be create? In my understanding, one account is a cash and second account is a capital stock. Now your understanding should be same. I mean cash is a one account, that is the asset account. Okay. And the capital stock is a part of a owner equity. Look there. And now how we can do a transaction for simply we can do a transaction, student. We first write the date. I mean you need to date 2011 January 20. Okay, you mention their date, and it is a simply the 4 column, like you have a first column of a date, then second column of a detail and explanation account, and a third and fourth will be the debit and credit amount. Okay, in your worksheet, and Excel look like Excel sheet, you can easily do there. You need to be write the name of a cash first account, it is a debit account, always debit account you will be write first, fine. And then 80,000 will be debit, and the capital stock, it will be a second account, it is a credit account, is a credit 80,000, fine. It is a all thing normally we are going to be used there. Account title, fourth thing is the debit, account titles, debit and credit amount. It is the first journal entry, first thing, journalization step, how we can record the business transaction, fine. It is all about the transaction, how we can record the business transaction. Then further we will go in the posting and a journal entry to the ledger account. It is the first concept, first step of our accounting. Then we need to be move the further posting journal entry to the ledger account, fine. Now we move next. Posting journal entries to the ledger account and how to read the journal entry, fine class. Now we need to be made the point that transaction are recorded first in a journal. Okay, the ledger account are just the update letter through the process of called in the posting. Basically in a accounting term we are using the word posting. When we use the make a ledger, we are doing the act is the say the posting, fine. In computerized accounting especially, you are using the posting often occur the instantly rather than the letter. Mean to say, as you record the business transaction, you have to maybe a word, you have a icon that you are a post. Okay, it is a directly post in your ledger account. Posting simply means the update the ledger account that will be affect the transaction recorded in a journal, fine. And now consider the first transaction appearing in the overnight journal ledger. Look the transaction again, it is the happening there. Look, we are do the transaction, cash 80,000 debit and capital stock 80,000 credit. Okay, it is our journal entry. But how we can make the ledger there? Now journal ledger are the, in this transaction we are using the two account. Okay, cash account, that is the T form of a T. We already know about the how to make the T account. Okay, yeah, the capital T, first thing is that you write the T, make a T, and it is your debit side. We write that is our debit side, remember. Okay, and it is our credit side. Right hand side is our credit side and your left hand side is your debit side, fine. It is the your credit side, there we will write the title of account. Okay, name of account which we are going to be used in a transaction. Okay, title of account, same thing is that going to be applied there. Now the title of account is the cash and we are write there debit, and date is mentioned there 80,000 cash. Look there, 80,000 cash is the debit. Now we will write there the debit side, fine. No values on a credit side, just a value is given on a debit side. Similarly, capital stock, when we talk about the capital stock is a credit account right there, and we are just write the right side of a credit side of a T account, fine. It is a simply normally how we will be make a ledger, it is called the T account, T ledgers, fine. And it is a second accounting step, it is a accounting cycle second step. First is the journal entries, and the second is a journal ledger. Okay class, now we will move the financial years. What about the financial year? You can say overall we normally discuss about the physical years of accounting period. It is in Pakistan financial year that start from the 1st of the July and end on a 30th of the June. Exception are the specialized business just like textile mill, your banking sectors, your sugar mills, and your telecommunication. Even though your business normal, your industrial mean to say your government privatize and government institution and make a budget of government budget, what on a which month or a date government going to be announce their budget. Yes, that is always the June July month. Okay. Now again the fiscal year in Pakistan closing is the closing and ending year, it will be considered end of June, and we will consider the start of first fiscal year start from the 1st July. Financial reporters and a company report that should be normally week make the report on a weekly monthly basis, depend the requirement of a company, but in the when they are going to be close a whole year, it should be the July and the June. Fine. It is the fiscal year that you need to be know about in Pakistan, that dates, and some multinational that are doing in a business in Pakistan that may be the uh, close their accounts in a December, and depend the country where they are the parents company. Okay. Now the second concept in this page is we discuss about the debit and credit balances. Fine. Now the debit and credit balances class is normally how we can get the debit and credit side. We have already mentioned about the both sides. Debit, that is a debit side, and it is a credit side of a ledger. Fine. On a T account, like this was a credit side, it was your debit side. Okay. If the debit side of a ledger is a greater, then simply how we can get the balance? Simple mathematical, not a very difficult thing. It is a simple thing that if the credit side is a greater than the greater balance, then we will write it is a credit side. It will be called as a credit, but in the accounting we will be called it is a debit balance. We will write it is a debit balance, but will be write as a credit form. Fine. The reason of being this is the balance is written on the credit side because of excessive debit balance. Fine. Therefore is the call of the debit balance. For example, right now come there, you will be better know with the example. Yes, there is a one of example. Yes, class. Now it is a computerized ledger in front of you. You can see there computerized ledger. Look, the title of account and any accounting code that we are going to be mentioned 01. It is a account code. Look like in your database when you make a number of account, that we need to be mentioned some account with the simple code 01, 02, 03. That is a basically simple. When we need to be call any account, that we will have no need to be called with the name. We easily 01, 03 and any particular account code, if we are assigning them, then we can use with the reference, and we will, well, when we need to be go on a detailed account title, then we go there. Otherwise we are just giving a simply just numbers, serial number that we assign in a database. Fine. It is a look like in your database, we can consider it may be the primary key. Fine. Anyhow, it is the date and the number, maybe the your voucher number, and some detail. Narration and the particulars and receipts amount. Again, it is a whole. Look again, it is a detail thing. Again I am going to be draw there. It is a T. It is a back T. Look there. It is a credit side. It is a debit side again. But we are writing there some detailed particular things like date, numbers, voucher number, narration and the particular numbers, and then further is the we write the receipts amounts. Okay, that's the amount that is going to be debit and receive. Like in the first transaction 100,000 you receive, in a second transaction you receive, company receive a 20,000. Okay, and the total is the 1,20,000. Fine. Similarly, in a third transaction some 80,000 that is going to be pay anywhere, and in a fourth transaction you pay the 30,000 anywhere, fine. And the total disbursement, total payment in this record is a 110,000, 1,10,000. Okay, 110,000, it is a total disbursement, mean to say that your cash outflow, and cash inflow, that is the debit, is a 120. Now which is the extra excess amount, what is the greater amount? You know the greater amount is a 120 and 110 is a smaller amount. Then the balance is basically 10,000. The how we can make a difference? Just 120,000 minus 110, the difference is the 10,000 figure, but we write there it is the 10,000. We write to doing the balancing, both side will be balanced if you write the 10,000 there, fine. And it is the debit balance, but we will always call the debit balance because it 120,000 minus 110 is the 10,000. In a debit side 10,000 is the excessive, fine, extra amount is the 10,000. And if we talk about the title of account, again it is a debit balance class, fine. And if we talk about the credit balance, how we can calculate the credit balance? Similarly, the same example, same transaction, but we are just going to be change the values. Like in a first transaction 80,000 is your receipts, and the two in second transaction 30,000 is your again it is receiving, same, I mean to say credit side value I am just putting on a debit side, and the one I find the total 1,10,000, 110,000, fine. And similarly 3 and 4 transaction I replace the value of 100,000 and 20,000, and the total of the credit side right now is a 120,000. Now we need a just 10,000 here. In debit side you need a 10,000, you need a 10,000 there. It's this 10,000, like this 10,000 we need to be right there. I write on a debit side, but it will be called the credit balance. It will be called the credit balance because the greater side is a credit side, okay, and the smaller side is the debit side. We write there 10,000, but it is the normally is the credit balance of your ledger. Okay class, hope so you are understanding about the how we calculate the debit and credit balances. Okay, now we go down, you can view, look there, it is the credit balance, okay, yes. And the normally how we can calculate the credit and debit balance, okay. Now you can easily check and recall this concept. Now I'm talk about the trial balance and how we can calculate the trial balance and how what the limitation of a trial balance. Okay, fine. Now the trial balance, that's the end of accounting period. List of the ledger balances is prepared. Okay, when you are in a second step, you make all the ledger account of appropriate account, particular account that are using in a transaction. The list of these balances called the trial balance. At the end accounting period, a list of all ledger balances, it may be a debit balance, it may be a credit balance, it list is called the trial balance, fine. And trial balance is a listing of a account in your general ledger and their balances as of the specified date. A trial balance is usually prepared at the end of the accounting period and is used to see additional adjustment and required to any of the balances. Since the basic accounting system relies on a double entry keeping system, that's again the concept is revising there. And the limitation of a if we talk about the limitation of a accounting trial balance is the simply trial balance is only show the mathematically accuracy of our accounts, fine. And then further, if both sides of the trial balance are equal, books of account are considered to be correct, but this might be not to be a true of all cases. Why? The four option, like if any transaction is recorded in wrong head, mean to say if example taken like it is a example expense is debited to an asset account. The debit I mean expense is the debit, and when you make a transaction of expense, expense is debit, and asset is also a debit. If we using the any expense debit into a asset account, that it creating a problem for us, because it is a basically your expense, but you debit it in your asset account. By the trial balance, it will be not be a detect any mistake, because it's showing the just debit balance. Okay, though if the both side trial and trial balance are equal, mean to say debit side is equal to the credit side, it not be necessary account. If the using account is wrong, then trial balance will be not be detect any problem. Fine. If any transaction is not recorded at all, trial balance also we not be able to detect the omitted transaction, because it is the transaction, if you not do a transaction, then it will not be identified you on a mistake. That is a just simply trial balance is the mathematically accuracy which account are you using, and which they are debit and credit account. Then if they are debit and credit are balancing, that's fine. Okay, if not, then you need to be revise your recall your ledger, calculate your ledger. Fine. That's a simple trial, mean to say title of account like cash in hand, cash at bank, capital, assets, liability, income, expense, total, etc. And the account code is given, and the debit balances and credit balances you can view easily. Fine. It is the first video that I am discussing about the some theoretical concept of journal ledgers and the trial balances. Now in a next video we record the balance sheet transaction, as we discuss in our learning objects. Okay, take care. Allah Hafiz for this video.